Hi there crypto fans, this is Guy from the Coin Bureau, and in this video I'm going to tell you everything that you need to know about the Kyber Network. Just one or two quick things before I dive in though. Firstly, although I may look like a financial advisor, I'm most definitely not one. This is only presented for your educational purposes and should not be considered investment advice. Also, if you're new to the channel, then you'll want to hit up that subscribe button. We release these videos on a daily basis and you don't want to miss our upcoming ones. Anyways, enough of that. Let's get right back into the Kyber Network. So, what is the Kyber Network, you ask? Well, it's a protocol that gives its users the ability to convert or exchange digital assets, tokens, and cryptocurrencies. It's along the same lines as the 0x protocol. However, Kyber Network does all its actions on a blockchain. When you use a centralized exchange, your assets are constantly at risk due to slower processing times and security vulnerabilities. For example, some of these exchanges take days or weeks to process your withdrawals. Decentralized exchanges are not without their problems too. Some don't have the liquidity necessary to provide live trading, or it may charge users high costs if the order book is kept on the blockchain. And that's where the Kyber Network comes in. It's a decentralized exchange on the blockchain, but without an order book. As a result, users experience a secure exchange with the ability to trade their crypto immediately at lower costs. So now that you have an idea of what Kyber Network is, let's take some time to learn about how it works. While you can use Kyber Network as an exchange, you can also transfer tokens from one person to another. This is ideal for any time you need to send a friend or co-worker some crypto. It's also a great solution for ICOs as well. Additionally, when you move your tokens through the Kyber Network, they don't have to match what the receiver wants. Kyber Network can perform the exchange for you during the transfer. Now, another piece of the Kyber Network you should be aware of is its dynamic reserve pool. This is how the project maintains its liquidity. Contained within the pool are all the reserve entities of the Kyber Network. Now, if any of this is difficult to follow, don't worry. We've covered it all in our complete review that I've linked to below. Anyways, back to pools. Storing a variety of entities within the pool keeps a monopoly from occurring. It also helps maintain competitive exchange rates. When you want to perform an exchange on the Kyber Network, the built-in smart contract completes it through the reserve entity, searching out the best exchange available. External reserve entities mean that the Kyber Network doesn't succumb to centralization. It also makes low-volume tokens available on its platform. As a result, the external reserves are acceptable when it comes to managing the risk of less popular cryptocurrencies. To keep out those with malicious intent, Kyber Network has set up a few protections. One way it does this is by flagging any exchange rates that are significantly beyond the typical rates. Additionally, any funds in the public reserve can be viewed through a transparent fund management model on the Kyber Network. Through the Kyber Network, reserve managers who maintain the reserve and enter the rates into the network earn a profit through the spreads within the reserve itself. Reserve managers also get a dashboard provided by Kyber to manage their reserve, along with the benefit of being able to tap directly into the overall Kyber Network. Now, we've covered this and much more in our long-form review. Let's move along now. I want to tell you about the Kyber Token, KNC. The Kyber Network Crystal, KNC, is an ERC20 token. To manage a reserve on the Kyber Network, a reserve manager has to purchase KNC. Every time an exchange takes place on the network, a small portion of KNC is charged as a fee. These fees are partially used to pay for the operational costs of the platform. They're also used as an incentive for third-party entities which bring additional trade volume into the Kyber Network. When the appropriate amount of KNC has been spent on these two items, any tokens left over are taken out of circulation, or burned if you prefer to use crypto terminology. The Kyber Network originally minted a grand total of 226 million KNC for its ICO. At the time, a little more than 60% of that total were distributed to those participating in the ICO. Of course, the number of coins available will change during the next few years as tokens provided to advisors, private investors, and founders begin to enter the market. Over time, burning these tokens will cause the supply in circulation to decrease, which makes the KNC deflationary. This, along with a demand increase, should theoretically drive up the price of the crystal token. Now, while this is a great theory, I don't need to tell you how complex the cryptocurrency market really is. There is no guarantee that we'll see an increase in the price of the KNC token. Indeed, it has been through a wild ride in price since its listing back in 2017. It was caught up in the preceding bull run and reached prices of over $5. Unfortunately though, the big bad bear market was lurking close behind and prices are now even below the ICO price. Anyways, let's not dwell on a negative. I want to talk now about the team driving the Kyber Network project forward. It's safe to say that the Kyber Network team has all the necessary qualifications to put even the most ardent skeptic at their ease. The founders of the Kyber Network are Loi Lu, Victor Tran, and Yaron Velner. Before Kyber Network, Lu created Oyente, an open source analyzer which examined Ethereum smart contracts. He also helped co-found Smartpool, a decentralized project focusing on mining pools. Velner has been a large part of the Ethereum bug-finding initiative, while Tran was also a significant part of the Smartpool project. The Kyber Network project also boasts a high-quality advisory board with none other than Ethereum founder Vitalik Buterin leading the way. Kyber Network successfully released its testnet beta in August of 2017 and just a few months later launched its mainnet. From that time, the team has been busy. It's since added support for conversions between ERC20 tokens, developed a suite of APIs for engineers, and implemented Gormos, its scaling solution which supports staking KNC tokens. You can actually see the pure volume of work being done on the project by observing their GitHub repositories. Quite extensive, if you ask me. Now, in addition to a great leadership team and advisory board, Kyber Network also has an excellent list of partnerships. Included on that list are Toshi, MyEtherWallet, OneChain, Wax, and several others. Let's move on to trading the KNC token. You can trade KNC with both Bitcoin and Ethereum, but you're most likely to have the volume you want when trading with Bitcoin. Taking a look at the order books, they appear to be pretty deep and there are healthy daily turnover levels. This could make it easy to execute larger block orders. Once you have your KNC tokens, you're going to want to find a place to store them. Since KNC is an ERC20 token, you can keep it in any wallet that offers ERC20 support. There are plenty of offline and online wallets available, so you shouldn't have any trouble finding one that works for you. Now we get down to brass tacks. What do I think of the Kyber Network? Well, I think it's an intriguing project with a lot of potential. It offers the unique combination of an exchange that exists on the blockchain along with a reserve warehouse. As a result, users get the best of both decentralized and centralized platforms. You'll be hard-pressed to find many teams that are as experienced and professional as those on the Kyber Network project. Plus, it boasts Vitalik as a member of its advisory board. It has many partnerships with well-known and reputable companies and has all the makings of a project that could dominate the decentralized exchange arena for the foreseeable future. So, really promising from a fundamental project level. Having said all of that, there does remain strong competition to the Kyber Network from other decentralized exchange protocols and decentralized finance in general. And of course, the token prices are a concern. We're near all-time lows and it's not immediately clear whether we're going to be seeing alt season anytime soon, so that's not ideal. Anyhow, we'll keep a keen eye on the project over the coming year and get back to you. And there you have it, my review of the Kyber Network. Now I want to hear from you. What do you think of the project? Are there any other coins that I should review? Let me know in the comments below. Oh, and if you found this video helpful, don't forget to like and subscribe. Many more reviews will be hitting the tube soon.